With regard to this trade issue, I think Chinese are much less concerned than the Americans, to be honest. They have much less to lose. US's dependency on Chinese export is far greater than China's dependence on the US as an export market. They can always direct a lot of their manufacturers goods to other countries. If US doesn't want it, they have other places where they can export to.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, what's up, guys? Presto Research Podcast, back at it again. Today, I woke up to some good news. Bitcoin hit 97K. Not feeling really bad about it. As Peter kind of predicted few episodes ago, we're kind of going up only. So, yeah. There are some more bullish news in terms of the Bitcoin buyers. So we have MicroStrategy announcing its 2025 Q1 earnings call.
Yeah, so by the way, MicroStrategy, they changed their name to Strategy. I know it's not, people are not used to it, so keep calling it MicroStrategy. But yeah, I'm going to force myself to use their new name, Strategy. So they announced their Q1 earnings, and I mean, you know, it's always fascinating to look at what these guys are doing. I think I was interested in first quarter number because it's the first time that they're applying the new accounting standard where they value the Bitcoin holdings mark to market. So previously, they had to follow, you know, they had to treat their Bitcoin holdings like the intellectual property, which meant that they don't mark to market. So so that was interesting. But you know, this company has never been about the accounting earnings that they release on a quarterly basis. This company is about their plan to accumulate Bitcoin and how efficiently they will do so has been the main driver of the stock price. So that's I think most of the investors were focused on, and from that point of view, there are a few things that were interesting. The first is, you know, they raised their KPI targets of you know, previously they were saying they're going to go for about the 15% Bitcoin per share growth for this year, but now they use the terminology called the BTC yield. You know, people who are not used to MicroStrategy is not gonna actually, you know, they can be misled because the yield means something different usually. But so I like to maybe rephrase it as a BTC per share growth rate. Their target was 15%, like I said, for this year, but they raised it to 25% now. And they also raised their 3-year capital raising plan to $84 billion from the previous $42 billion, which was announced back in October last year. And the thing was, they already achieved, like in less than 6 months, they already achieved 65% of the original target. So that's why they are raising it again. I mean, it's also interesting they use these numbers. You know, the number 42 is a double of 21. You know, all these numbers have meanings in crypto, right? So yeah, it's interesting that they're using these numbers. And also they've let's see. Sorry. Also, they spend a lot of time talking about their the fixed income instruments that they've started issuing starting from January this year. So, you know, previously their primary means of raising money from the public market was issuing new equities or convertible bonds. But starting from this year, on top of those two, they've added the preferred shares. Preferred shares, in a lot of ways, it's quite similar to just the regular fixed income. They pay, you know, dividends, more higher dividends than the usual, like a regular common equity, and so it can be viewed as like a perpetual. It doesn't have a maturity, so it can be viewed as a perpetual fixed income instrument that pays annual coupon. And I think MicroStrategy wants to use these instruments more going forward than the equities, because Michael Saylor have indicated a few times that the company can use more leverage And now I think the problem here is that their fixed income instruments are not being rated by the credit rating agencies right now. So they cannot price these instruments more at the more attractive level for MicroStrategy. They have basically MicroStrategy has to pay more in terms of interest expense. So he was urging fixed income investors to put in a request to the likes of S&P 5, Standard & Poor's or Moody's to include the MicroStrategy's fixed income as part of their coverage. Hopefully, that'll translate into a higher price for these fixed income instruments. And lastly, I think Michael Saylor spent some time talking about why he believes the share price deserves to trade at multiples of NAV. Like MicroStrategy, I think it's been trading since maybe beginning of last year. It's been trading at something like a 2 to 3 times NAV of their Bitcoin holdings, and some people has been arguing that this is a sign of bubble. But he's saying that it's justified because unlike ETF, which trades at par to their NAV, MicroStrategy can offer many different types of instruments to the institutional investors, giving them more variety of channels to raise money from the public market, and therefore its ability to acquire BTC is far more superior to ETFs, and therefore he thinks this is justified. Another way he justified is because by issuing convertible bonds, MicroStrategy can monetize the high volatility of a Bitcoin, and that's again another feature that the ETF does not have. So his argument is that because of these things, NAV multiple is justified. So yeah, these are the four main kind of takeaways from their Q1 results.
I actually have one question on the NAV part. So just making sure if I'm understanding right, the reason strategy can do this whole thing is because of they're trading at NAV premium, which basically they're selling $1 of their own stock and buying $2 of Bitcoin, right?
Yeah.
They're trading at 2x multiple.
Yeah.
So, but I was thinking like you've got firms like 21 Capital, right? Which I think we mentioned last episode or the episode before, which is more a pure play on Bitcoin, and also they're offering like structured products as well. So if we have more and more companies that's doing the same thing, and if we have companies that I guess in my sense give better exposure to Bitcoin, will that like kind of kill the NAV premium for MicroStrategy?
Yeah, so that's definitely a valid concern. I think as more copycats appear in the market and do the same thing, there's going to be competition for this type of instruments. Up until now, MicroStrategy was the only one, so naturally, everybody was kind of, like just rushing to get it to this one corporate entity. Now the investors are going to have more choices in the market. So I think MicroStrategy's ability to raise money from the public market, from the institutional investors, is going to be somewhat weakened, I think. But also, there's actually some people argue against it, saying that MicroStrategy is still going to be a winner because it's a network effect. It has already accumulated so much, and then their ability to, they already developed all these know-hows that others cannot easily, quickly copy, or they're going to have a more efficient operations, so on and so forth. So I don't know. I don't know what the answer. But I think maybe definitely that the novelty factor is going to diminish, I think, as more companies come to the market, and so we'll see. But yeah,
what do you guys think about these companies acquiring so much Bitcoin that a significant amount of Bitcoin is being held by a small pool of people, and some problems can derive from that fact? Do you see any I see a lot of people on Twitter saying, oh, MicroStrategy has like 2% of the Bitcoin supply, like what do we do? Is this a good thing or a bad thing? Do you have any opinions on that?
I do, actually. I think people completely missing the point. I think when I think people who raise these concerns are looking at everything from a retail investor's perspective. So, of course, these are big numbers. From a retail investor's perspective, if there are other corporates copying MicroStrategy's strategy, then you will have other corporates also competing for these large holdings. And it's a similar thing to nation states acquiring Bitcoin as well. And some people worry that because like the US is going to acquire all this Bitcoin, that means a centralization and blah, blah, blah. I mean, well, it's not, if the US is the only one who does it, yes, but it will trigger game dynamics, the game theory dynamics, and then other countries also compete. So that means it'll still, it'll be large companies or large nation states competing for equal amount of Bitcoin holdings. I'm not necessarily concerned about that too much.
Yeah, that's also like some kind of a thought process. I mean, a thought experiment I do pretty often, that let's say strategy dumps all their Bitcoin and Bitcoin goes to like, I don't know, like $100. Like what would be my choice? I would definitely buy. So I'm not really concerned, but there are a lot of people talking about these type of things. So I just wanted to ask that question.
Sure.
Yeah. And for next up, we have some good news from Apple making some changes in their policy. So basically, Apple will stop restricting app developers from directing users to external payment methods, including crypto options, and cease charging fees on off-app purchases. So Apple immediately followed up by quietly updating its iOS App Store guidelines. Min, do you have some more to add on this?
Actually, it's going to be Peter for this one.
So basically, I mean, what happened? This is potentially a very good news. I think what happened here was that the Epic Games, there's the game developer called Epic Games. They actually sued Apple back in 2021, saying that the Apple's current practice of not allowing this third-party payment on the App Store is against the law. It's not fair, and it's a very monopolistic practice. And then court ruled in favor of Epic Games and against Apple. So the court issued the injunction in 2021, 4 years ago. But Apple, being such a big company or whatever, they decided to just ignore it and not do anything. Don't make any changes. So it's been like that for the last 4 years. So I guess the Epic Games got really pissed off. So they raised that issue. I think they sued again, and then the court basically said that Apple has been willfully violating the court's 2021 injunction and has to take action immediately. That's why as soon as this ruling came out, I mean, there was no sitting around and whatever. Apple had to react immediately and then issue these changes in their policies. And so I think it's it's one of the factors that removes. It's a news that removes one of the frictions of crypto adoption. So I think it's a good news. But of course, I think to see the real adoption, what I mentioned here, legal victories aside, we must continue to find efforts to find a good product market fit, because it's one thing to have these obstacles removed, but it's also that doesn't mean that we just adoption happens automatically. I think industry still needs to work at it.
I've already been using apps that directly, I don't know, like it's not in-app purchases, but for example, like Vector or this app called Believe, which was Clout like a few months ago. It didn't I'm not sure, but I don't think it was giving out 30% to Apple, because I was directly purchasing tokens on that app, which was built on Solana. So regardless of this ruling, it seems like nobody really cared about Apple's policies, in-app policies. So I'm not sure, like you said, if this really has any big effect on crypto overall. But it seems like, big companies, I think it matters for big companies like Epic Games or like new companies that are trying to crypto technology into their platform. Maybe we can see like some major publishers or some major AAA games integrating NFTs or crypto payments into their apps. For example, MapleStory, they're coming out on Avalanche. I think, I'm not sure if they launched, but they're launching very soon. So it's pretty bullish news for like bigger corporations, which kind of moves the needle in terms of adoption. So it's overall bullish in my opinion. But as you said, there are a lot of instances where people they just don't care and just implement payments in their app. So we'll have to see how this really plays out.
So which app was it that you were purchasing things from without paying? Which one?
It's called Believe. I'm not sure if like they did not pay the 30% to Apple, but my gut feeling was that, well, I'm paying 1 Solana to buy this one token here, but like how Apple's going to charge 30% from an on-chain transaction, right? So it's called Believe, but it was known as Clout. It came out in February, and also there's this one called Vector. It's a social trading app built by the guys from Tensor. So even that one, I was just buying meme coins on it, and I never saw 30% being like ripped off from my on-chain transaction. So
I mean, it's usually the developers who have to pay for it, not the end users. I mean, unless the developers decide to pass down the cost to the end users, it's usually so the developers would be less incentivized under the old rule, less incentivized to do anything outside Apple's payment system. So. But now, now Apple cannot. So,
Min, do you have anything to add on that? Do you have any experiences like trying to use an app, or you wanted something, or you heard anything about in this regard?
Yeah, so I don't think it's gonna be charged on the on-chain transaction, if I'm right. I think it's more on the, I guess, like MoonPay and those kind of stuff transactions, if I'm correct. But I mean, long time ago, I was using like MoonPay to onboard, and it's taking enormous fees. I think they still charge a lot, and as it gets older and older, and those fees are getting reducing. And just seeing this, I don't think there's going to be a big change, like Peter said. But just as a retail investor, just a good news for sure.
Yeah. I think it's even more bullish to people outside of crypto, actually, because they can just directly lead their users to some off, I mean, like something off their off Apple, and directly get paid. So yeah, that's that. And we have some news where I forgot his name. I think Rick wrote this report. And it's basically about Trump favoring this guy called Kevin Warsh, who is a potential chair of the Fed. And Peter, can you tell us about what this is all about?
Okay, so I'll take it actually, because Kevin Warsh is like the former Fed governor and also Trump's top pick as a Fed chair. And he openly said that he wants to fire Powell and then replace him with Kevin Warsh. And a couple of weeks ago, he was at G30 spring lecture and pretty gave a bold message. And I think the main message was clear that the Fed is doing too many stuff right now. He criticized Fed for taking care of climate changes and inequality. Like why he's basically saying, why is Fed taking care of the social issues? And also he said that the modern tools like forward guidance are misleading. And he also criticized that quantitative easing, that the Fed's bond buying is basically enabling government overspending and also distorts the market structure, I guess. And basically his speech calls for a return to the discipline of the 1951, I think it was like Fed Treasury Accord. So what the accord was, during the World War II, the Fed kept interest rate artificially low because they need to fund the war. And they pegged the long end rate at, I think, 2.5%, and the short term rate at 3/8. And the Fed and the Treasury agreed, after the war, the Fed and the Treasury agreed that the Fed would no longer be obligated to peg interest rate or directly support the price of Treasury. And so it kind of allowed the Fed to become an independent monetary policy and also focus on their two mandates, inflation and unemployment rate, rather than other things, right? So I think this times well with the current situations. I know Rick wrote, but I think after reading what Rick wrote, I think it times well with the current situation where there are rumors that Trump is doing all this trade and tariffs and stuff to keep the interest rate low because they need to refinance their treasury at a lower rate. And what it's kind of ironical that Trump actually likes Warsh, but Warsh said this. But I guess Warsh in general is a one who believes that the Fed should solely focus on two mandates and take more a minimalistic approach and discipline as a central bank.
Yeah, I was also reading the thing and I was like, wait, this guy doesn't want to listen to people outside of the Fed. He just wants to make his own independent decision. But why would Trump, like, who wants to force the Fed to do things for him, like him? So maybe in, like, you know, political theory wise, they are kind of aligned. But again, Trump trying to do these things, it's maybe, you know, it could be a whole facade. Like, he could just be saying things and, like, he, you know, he was bribed or something. Like, maybe he just hates Jerome Powell so much that he just wants someone who kind of aligns with him. Yeah, but, you know, like, I think right now we're seeing big uncertainty because, like, recently we had the Hong Kong dollar and the new Taiwan dollar kind of making some moves against the US dollar. So I'll just show you this graph here, which it says that, you know, the Taiwan dollar has risen in value against the dollar. And also this one, the Hong Kong dollar. So this one shows, like, the opposite of where the US dollar is weakening against the Hong Kong dollar. So as a person living in Hong Kong, Peter, what's your opinion on this?
Yeah, actually, but before we get into that, I just want to add something to the Kevin Warsh comment. I think one thing I would add is I don't think Trump actually ever said that he will pick Walsh official in a public speech. I think market is speculating because Trump has been talking to him as an advisor. So market speculate that he's going to be the next chair. And then I think there's another thing that I heard was that the Jerome Powell's term is going to expire early next year. Trump doesn't want to wait until then, but he cannot fire, right? He doesn't have a mandate to do that. So I think his strategy is to let the market think that Kevin Walsh's words matters more than the Jerome Powell's word, because Jerome Powell only have his days are numbered, right? He's on his way out. Whereas you know, and if markets start to think that the Kevin Warsh's words carries more weight, then indirectly, you know, Trump can somehow influence how the market behaves, right? Through the mouth of Kevin Warsh. So I mean, it's just a room, like some chatters that I heard on the internet. And like going back to the the Asian currencies, like doing all these crazy moves. I think led by Taiwan dollars, but I think the Hong Kong dollars had some movement as well. I think the Singapore dollar is another one. I think Korean one had a little bit of movement as well. I mean, all this, I think, you know, what's happening here is basically because in the month of April, US dollar started to depreciate, and all these Asian countries are actually big creditor nations to the US. They hold large amount of US dollar debts, right? But you know, some hedge, some don't. I think for whatever reason, Taiwanese financial institutions, mostly life insurers, they apparently didn't bother to hedge too much because they thought, because dollar has been appreciating and it's going to continue to appreciate. But then suddenly April came when dollar started to tank, and then I think these Taiwanese institutions, they panicked and then just go for the exit all at once. So as a result, you know, they were like selling dollar asset very aggressively in the market simultaneously, all like trying to exit into Taiwan dollars, and that's why Taiwan dollar appreciated so much. And then that triggered others in the market to speculate, oh, maybe something similar is going to happen to other Asian countries with the large US dollar assets, such as Singapore and maybe Hong Kong dollar as well. By the way, Hong Kong dollar is a pegged currency. So the appreciation that you're talking about here is within a very narrow range. But nonetheless, people still talk about it because sometimes it can be very volatile within that very narrow range.
Yeah.
Yeah.
I guess institutions are the same as normal people. They just sell and buy at FOMO. Min, you have anything to talk about it?
So this morning I actually read a conspiracy theory, or more of a plausible scenario of what happened. So on the surface, there are three main reasons why this happened. One's like people expecting slower U.S. growth and I guess rate cut, and the second is basically Taiwanese insurance company unwinding, like Peter said, and the third is like the growing optimism about the trade negotiation, trade agreements. But what he basically argued is this is all the superficial known kind of reasons, and something behind is going on, which is related to politics. And he said that basically Taiwanese governments are allowing the Taiwanese dollar strength possibly as a bargaining chip out of the trade negotiation. And also he thinks that the US goal is basically making China appreciate their yuan. For sure, China won't do it right now because number one, they're on a deflation cycle. Number two, exports are weakening. And third, they know what happened after Japan did the same thing. So US target kind of shifted towards Hong Kong. And basically they're making, so what we are currently seeing is after first time since 2003, we are seeing pressure in the opposite side. And he also mentioned something interesting that it's actually a perfect timing because Chinese EV maker, CATL, is about to IPO in Hong Kong, and there are really lots of demand for it. So it's like kind of perfect timing to attack and strengthen the CNH and stuff. So this is just one conspiracy theory, but I think kind of makes sense. And if you kind of think about the politics and stuff, this could be, and it would be pretty much interesting to see how Hong Kong dollar reacts, and will the peg kind of depeg, or will something happen there? And what will happen? I know there are news coming out this morning that there will be agreements happening or trade talks happening between China and US. So it will be pretty interesting to see how those currency and also trade tariff talks kind of progresses.
You want to make any predictions on what the outcome would be on these talks or agreements?
Yeah, but the prediction I'll make is Trump is going to declare victory. Whatever comes out, he will spin it as a win for the U.S. This is the best trade deal, the beautiful trade deal. He's going to go do this. Yeah.
Yeah, that's for sure. That's for sure. But again, for real though, I think nothing substantial would come out, in my opinion, because I think they have not lost as much. Nobody's their economy both are not great, but they're not bad either. So before any economy really crashes, I don't think we're going to see any significant agreements in regards of someone has to fold eventually first. So the one who goes broke will fold, and I guess we'll have to speculate on who goes broke first. But during the last episode of this podcast, we were talking about how a recession might happen in the summer of 2025. Well, that's just a report from these guys called Apollo. But I think we're going to see some results in the summer if that were to come true. And it's I think it's almost like destiny, because like I said, nobody's going to really try to say that, oh, I think we should lower tariffs, we'll give you this and that, before they really feel the pressure. And I'm hearing a lot of talks about how this high-ranking officer, high-ranking general in China got fired, and he's nowhere to be seen, and China, their power structure is kind of crumbling. Well, this is all YouTube propaganda. But Peter, I think you might have some better ideas how people in Hong Kong or China might perceiving this. Do you see some discontent, or do you hear what kind of rumors do you hear there?
So I was in China over this past weekend, right? It's a long weekend here. Same as in Korea, I guess. I was in Shenzhen. It's business as usual. I realized, the Shenzhen is, so I lived in Hong Kong for 20 plus years, right? So I was here at the beginning of China opening up to the world in early 2000, before all the, benefits of the trade surpluses. And then 20 years later now. And I think Shenzhen represents the magnitude of the change that took place in China over the last 20 years. Because when I first went to Shenzhen 20 years ago, it was like a very dirty, shabby, not a very pleasant city to visit. You go today, it's very clean and very modernized. I have to say, I enjoyed being there far more than I enjoy myself being in Hong Kong sometimes. Some parts of the city is really nice, very pleasant. And it's far more civilized than you would think. Services are better in Shenzhen than in Hong Kong, I would say. You go to restaurants and places like that. I think there's a lot of misrepresentation. I think China has a PR problem. They don't go out and talk enough to tell them what sort of the economy they're living under. I mean, China is not perfect, but I think the perception people have outside China, especially amongst the people who speak like English and just get the information through English media, is completely. I think they're very biased. They have a very unfairly biased views against China, I think. Now, with regard to this trade issue, I think Chinese are much less concerned than the Americans, to be honest. They have much less to lose. So they can always. I think if you look at the amount of. I think the U.S.'s dependency on Chinese export is far greater than the China's dependence on the U.S. As an export market. They can always direct a lot of their manufacturers good to other countries. If the U.S. doesn't want it, they have other places where they can export to. I think, relatively speaking, right? So I think both sides will. But I mean, I think that doesn't mean that both. That doesn't mean that there's nothing to lose. China still have to maintain, their economic structures and so on. So I think they will eventually negotiate. And then I think what you said about the recession. I think there also. I mean, I know there are people that are concerned about recessions, but there's an equal amount of people out there who believes that recessions is not coming at all. You see these people quite often on the Twitter as well. Like you look at the labor data recently, labor market data last Friday. Was it last Friday or maybe a few weeks ago? It came out very strong. So you're not going to have a recession if you don't have a job loss. So I think the thing about recession, it's not a done deal. I mean, it's jury's still out, and no one knows whether we're going to go into recession or not in the U.S. Just looking at the data, it doesn't seem that way. If you were to ask me, so that's my take.
What do you feel about this whole thing, man? What side are you on? Obviously, I'm more biased towards the U.S. Peter's more biased towards China. What's your opinion?
I actually agree with Peter. I mean, I think 2 months ago, I also visited Hangzhou, and it was completely different from what I thought, right? It was super clean. Everything's very high tech. I also had BYD, or one of the EVs in China, and it was really great. And I think in terms of current situation, if you think about who has more, I guess, tenacity, it's going to be China. I mean, Trump obviously has those political pressures if he continues this trade thing going on, whereas Xi Jinping is more kind of free on that side. So I think in that sense, if who has more tenacity, I think it's going to be China.
Yeah, I mean, just think about what are the things the U.S. can export to China? Not much. It's all agriculture products like soybeans. I mean, remember last Trump. The first administration, the thing that the trade pact they both sides agreed on was to import like a large amount of soybean and I think it was corn. That's what U.S. has to offer, and then U.S. Treasury, right? So the best export the U.S. can offer to China is a U.S. debt and agriculture products.
So I think that's like the thought process of mine. Like, this might be outdated data, but as long as I know, China imports most of their food. So like the input for their foods come from other countries. For example, to feed pork, they need to import like other stuff from Argentina, like Brazil, the US. So my thought process is, the US, people in the US, they don't need things from Temu to survive. But what if China, they can still import things from outside of the US, but if they get cut off from US imports totally, they still might go through some food problems. That's why they're stockpiling a lot of stuff in like regions in China. So food versus Temu items, what is your choice? I would go for food if I were to have like totally eviscerated of like basic needs to survive. So I mean, this is like an extreme comparison. So if this goes like really to the extremes, I would say the one who can eat at the end of the day will win. So I'm not sure how this will go, but yeah, that's where I'm kind of placing my bets. So yeah, it was a good conversation on China versus the US. I guess I got one-sided by the two gang members here from Min and Peter. But yeah, we'll see how this all turns out. I hope we never nuke down to, I don't know, like I want Bitcoin to go up only. I hope everyone stays safe and see you next week.
Bye.